The rand still hovering around those weaker levels, and that's despite an improvement in equity markets yesterday. Looks like some of the risks still very much in the system and weighing on sentiment.
Absolutely, Stephen. I mean, we have the crisis in Ireland still ongoing. It seems that internal politics in that country are preventing them from accessing the emergency loan from the IMF as quickly as one might initially have hoped. And that's obviously been sparking and is still sparking a flight to safety. And so the rand weakened against the dollars, particularly for most of yesterday. But then we saw it strengthen in the afternoon because the dollar started to weaken after we had some poor durable goods data, housing and consumer spending data out of the US.
That data yesterday from the US, so we had some poor durable good numbers, very poor home sale numbers. Same time though, jobless claims are looking a little bit better and consumer sentiment also improving. So still very mixed data coming through from the United States.
Yes, Stephen, that is true, and I mean that is to be expected in any sort of recovery. Things are not going to recover at an even pace consistently, but as you said, it is encouraging that we saw an improvement in consumer income growth. Consumer spending growth also was up in the month, and that should continue to support some recovery in the household sector in the US. That may not be enough to counterbalance the deterioration in durable goods orders, because that's normally used as a barometer of where fixed investment growth is headed, but certainly it is an encouraging start.
CPI yesterday coming in a little bit higher than expected, 3.4% growth year on year in October from 3.2% in September. And I think the market was expecting it to remain steady at 3.2 or edge up slightly to 3.3. Your view on this, is it bad data? Is it to be expected?
Well, it certainly wasn't expected, Stephen. We had penciled in an increase of 3.3%, so in that regard it wasn't an unwelcome surprise. But we have had inflation undershoot expectations consistently for most of this year, so I wouldn't panic over the one number. I think one would have to look ahead to the next month to start talking about a trend, a sort of upside surprise in consumer prices. But I think that most of it was just that administered price growth was higher than expected, but I don't think that it's I wouldn't make too much of a big deal of it at this stage. I mean, 3.4% is only marginally higher than the bottom end of the target range.
Of course, we have seen producer inflation retreating a bit over the past couple of months as well. What are you expecting from PPI today? Do you think that could also provide a negative surprise?
Yes, Stephen. We've penciled in growth of 7.1% year on year for October, slightly more bearish than market consensus. I think in general people are expecting it to have remained flat, increasing by 6.8%, which would be the same annual increase as in September. But there definitely, when it comes to PPI, there's some potential for an upside surprise with that number.
Looking ahead to today, of course, we have the Thanksgiving Day holiday in the United States, and I think the market's only open for half a day tomorrow. Would you expect trade to be reasonably muted then?
Yes, absolutely, Stephen. I mean, that would, particularly where the rand is concerned, thin trade would tend to exaggerate the currency's movements. So that's definitely an important factor to take into consideration for today, particularly. But also, as you say, with looking forward to tomorrow, it's likely that some people are just going to have taken an extended holiday, and so there could be the same risks in place for tomorrow as well.